There's no denying the importance of diversification in your portfolio. A well-balanced mix of investments is critical for managing risk and riding waves of market volatility. While the typical investor may turn to a mix of stocks, mutual funds, and bonds to diversify, many others are seeking opportunities outside the traditional markets. Alternative investments such as real estate, private equity, or cryptocurrencies may be more alluring for these types of investors. Alternative investments can add a new layer of diversification, as well as yielding tax advantages if you're holding them in a self-directed individual retirement account. According to the U.S. General Accounting Office, nearly 500,000 investors own self-directed IRAs, with collective assets valued at $50 billion. The primary advantage of a self-directed IRA is to invest in items that may not be allowed by a traditional IRA custodian. With a regular IRA, investment options are limited to publicly traded securities such as mutual funds. A self-directed IRA gives investors greater control over their investment options and how they access those assets. With a new level of freedom, an SDIRA allows you to match investments to your individual investing style. Your time horizon and preferred strategy can strongly influence where you park investment dollars in a self-directed IRA. Private equity, or private placements, and real estate seem to be the most popular choices for buy and hold investors. So here's how it works. You can transfer all or part of the funds you currently have in any type of tax-deferred savings account, whether that's a traditional IRA, a 401k, or a Roth account, into a self-directed IRA account. There are many SDIRA account providers, and the process is very similar to that of opening a savings account at your bank. These are a few self-directed IRA companies that we already know, but there are many others. Once you've opened and funded your SDIRA account, you can choose to use the SDIRA company as your custodian, where you have to fill out paperwork for each investment transaction and wait for them to make the transfer. Or you can create a limited liability corporation where the LLC is 100% owned by the SDIRA account. The LLC then opens a checking account that can be funded by your SDIRA account. And you now have checkbook control over your own money, but the key is that as long as you follow some simple rules, you can grow this nest egg with the same tax benefits as a traditional IRA, but you are in control to make decisions on which investments to buy and sell, whether that is in the form of real estate, private equity, or private placements, or even make private loans from this account as well. There are a lot of details that we could talk about, but I hope this gives you at least a general understanding of an option that you never even realized existed until today. May all your investments bring you happy returns.